Hi, good morning, everyone. Welcome back to this discussion on accounting standards. So, in the previous session, we were discussing AS12, that was about government grants. So, today we plan to continue on that. We'll just practice some of the questions around it because largely the topics we had covered in that. And we also plan to get on to our next topic that will be about amalgamations. Okay, so that's the agenda for today. Now, before we get on to the practice questions, let's quickly do a recap in terms of what all we have covered when it comes to the government grants. So for government grants, we discussed that government grant is something which is provided by the government to an entity wherein certain conditions are attached. So that's the feature of the government grant. So it could be a monetary contribution or non-monetary contribution, right? Now, for this government grant to be recognized, we also talked about one criteria that in relation to this government grant, till the time criteria is not fulfilled, you will not be able to recognize it. So can you all quickly let me know what were the criteria or what is the criteria for recognition of government grant? Over to you quickly. For recognition of government grant, what all criteria we need to fulfill? Yes, over to you quickly. So which all conditions, which all criteria you'll have to fulfill for a grant to be recognized? Yes, quickly, over to you. So let me just help you on this part first. So for a government grant to be recognized, first criteria is of course the compliance of the conditions. Okay, like Hardik just mentioned. Okay, then Pranav says that in relation to those conditions, there should be a reasonable assurance. Very good. And the other one is about whether this grant will be received or not. There again, you should have reasonable assurance. Great. So I can see similar response from Anirudh, Nitin, yeah, Gurminder. Very good. All right. So now moving further on to the accounting of government grant. Now, depending on the category of the government grant, we discussed that its recognition, its accounting is changed. Okay. So therefore, in relation to the government grant, yeah. So when it comes to a capital grant, so let's suppose if it's a capital grant, means the grant is related to the assets. Okay. So in that case, what accounting approach is allowed by the accounting standard? Yes, over to you quickly. In case of capital grant, what accounting approach does the standard allow? Okay, Anirudh is saying two approaches. Very good. So what are those two approaches? So how would you account for a capital grant? Hardik says, one, you reduce the value of the fixed asset, which is PPE, and second, wherein you are recording that as deferred income. Okay, same is the response from Gurminder, Khushi, Sai, Pranav. Great. Now, moving on to the next grant, that was about revenue grant. So, what is the accounting requirement for a revenue grant? What is the accounting requirement for a revenue grant? Yes, quickly. Okay, Anirudh says it will be taken to P&L straight away. Okay. Pranav says here again there are two approaches. Huh? Either you reduce this from the related expense or you record this as income. Yeah. And under income, you will record this as other income. Yeah. Very good. Same is the response from Hardik and Nitin. Correct. Gurminder is also saying revenue should be recognized. But please remember, it's not something which will be called as revenue. It will be called as income. Okay. So whenever in the exam you are required to write this, please remember revenue and income, these two terminologies could have different meanings. Yeah. So that's how you need to remember this. All right. The other one was about promoters' contribution. So if in case grant happens to be in the nature of promoters' contribution, what is the accounting requirement? Yes, quickly. What is the accounting requirement in case grant happens to be in the nature of promoter's contribution? Yes, very good. So Pranav says it will go to credit reserve. I understand you mean to say capital reserve. Yeah, same is the response from Larry, Khushi, Gurminder. Yeah. Hardik is also giving the accounting entry against this. Very good. Yeah. Then we also talked about refund of these grants. Okay. Now, in relation to refund of these grants, can you tell me when would this refund be required to be given by the entity to the government? Under what situations refund is required to be given? Under what situations one can say that refund is required? So tell me, what will trigger the refund? Very good. Anirudh says, if the compliances are not fulfilled. Yeah. Same is the response from Sai. Very good. So if in case the entity is not able to fulfill the conditions, huh? And please remember, in terms of fulfillment of conditions, it's not only for 1 year or 2 years. It's about complete compliance. Okay. So whatever was required to be complied with, if that has not been complied, so the government may ask for the money back. So that is what you call as refund. And if in case there is a refund, what do? You will just simply reverse the accounting, which you would have done earlier. And the corresponding impact, if at all it arises, where does it go? It will go to P&L. Okay, so that's how you need to remember this. Fine. Now what we will do is we'll just look at some examples. Huh? Okay, so let's look at this illustration number 7. And you need to answer this. Huh? Small one, some of these. Z Limited purchased a fixed asset for rupees 50 lakhs, which has the estimated useful life of 5 years with a salvage value of 5 lakh. On purchase of assets, government granted a grant of rupees 10 lakhs. This amount was reduced from the cost of the fixed asset. Now, please understand, a question has a limitation to give you the answer. Grant was considered as refundable in the at the end of the second year to the extent of rupees 7 lakh. Okay. You are required to pass the journal entry for refund of government grant as per the first method. So what do you mean by first method? Wherein the grant is reduced from the cost of the asset. Okay. Any which ways this accounting treatment is something which the question will have to clarify. Okay. Now, in this case, can you tell me what will be the accounting entry that you will pass? Yes, over to you. What will be the accounting entry? Great. So Hardik says fixed asset debit to bank. Okay. Sai is saying reversal of depreciation. All right. What about others? Quickly, huh? Quickly. Anirudh is saying to fixed asset debit by bank. Okay. Yuna says fixed asset debit to bank. I think same is the response from Nitin also. Now, let's try to understand the accounting entry. See, the money is going out. Yes or no? So if you look at the entity will have to credit bank. And what's the amount? 7 lakh. Okay. It's 7 lakh. So that's why bank will get credited. Okay. Against this, what do you debit? Because this amount was reduced from the cost of the fixed asset. So that's why at this point of time, fixed asset will be debited. Fixed asset will be debited. Now, in relation to this, I can understand. I think Sai mentioned that depreciation will have to be reversed. No, depreciation you will not reverse. Why? Because anyways, your asset was depreciated at a lower amount in the previous year or years. Okay. So now you are only increasing the value of the fixed asset. You are not required to reduce this. Okay. I can see similar responses from Neeru, Bhavna, Shibu. Very good. Okay, now let's look at one more illustration. A fixed asset is purchased for rupees 20 lakhs. All right, fixed asset is purchased for rupees 20 lakhs. Government grant received towards it was 8 lakhs. Now, in relation to this, there was a government grant of 8 lakhs. The residual value is 4 lakhs, useful life is 4 years. Assume the depreciation on the basis of straight line method. So now, for the purpose of charging depreciation, it will be SLM. Asset is shown in the balance sheet net of grant. What does it mean? Here again, a question will have to give you the answer. Means when the grant was given, it was reduced from the cost of the asset. So can you tell me at what amount asset would have been recorded? At what amount asset would have been recorded? Very good. Hardik, Anirudh, they are saying 12 lakhs. Yes. Why? Because cost of the asset was 20. From 20, if you reduce 12, what do you get? Sorry, 8. What do you get? 12. Okay. Bhavna, Shivu, Nitin, they have the same responses. Great. After 1 year, means at the end of 1 year, grant becomes refundable to the extent of rupees 5 lakh due to non-compliance with certain conditions. Obviously, yeah. In this case, you are required to pass journal entries for the first 2 years only. Okay. Now, in this case, see, in most of the cases, when it comes to government grant, accounting requirement is something which is going to be tested. Okay. So that's why the most relevant question for you will be to pass the journal entries. That is what appears to be the case. Okay. And whenever you will pass the accounting entries, please remember, when the question asks you to provide the accounting entries, there will be two stages. One, when the grant is received, and second, to carry forward or to pass the accounting entries towards the end of the year. Okay, so in this case, there are 3 points of time when the accounting entries are required to be passed. What are those? Can you tell me? There are 3 dates effectively, or 3 points of time when the accounting entries are required to be passed. So can anyone tell me what will be those what will be those points of time? Okay, Anirudh is saying, okay, so Anirudh has given me the accounting entries. Of course, I'll come to the accounting entries, but before that, what are those points of time? Okay, great. Hardik is saying, one, when you get the grant, second, when you purchase, third, depreciation, fourth, second year repeat. I'll put it in a different manner. I'll say that in year one, okay, so that is your first point of time. Then you'll have year end, first year end, that is your second point of time. Third point of time is second year end. Okay, so that's how you should look at it. Okay, now when you receive the grant and when you purchase the asset, what do you record? Fixed asset debit to bank. So that is the accounting entry you'll have to pass. Okay. Now, when you receive the grant, you'll reduce the value of the fixed asset. That is something we have already looked at in our previous examples also. Okay. Then at the end of first year, what do? You will charge depreciation. So tell me, will you charge depreciation on 20 lakhs or 12 lakhs? Will you charge depreciation on 20 lakhs or 12 lakhs? Great. Dilip says 12 lakhs. Priya, Bhavna, they are saying 12 lakhs. Yeah. Malu has the same answer. Very good. Now, on this 12 lakhs, when you charge, so you have a residual value of 4 lakhs. Okay. So you are left with 8 lakhs effectively divided by 4. So your depreciation therefore will be 2 lakhs per annum. Okay. So your depreciation will be 2 lakhs per annum. Correct. Now, this depreciation you will charge in the first year. Correct. Okay. Now, and you will take this depreciation to the P&L. Now, in the second year, what do you have? In the second year, sorry, at the end of first year itself, at the end of first year itself, what do you have? This refund is required to be given. Okay. So therefore, when you refund this, when you refund this, what will happen? You will have to increase the value of the fixed asset. You will have to increase the value of the fixed asset. So in a way, what are you doing? You are reversing this particular accounting entry. So if you remember this accounting entry, you are reversing this. Okay. And how do you reverse this? So we'll say fixed asset debit to bank. Now, can you tell me after this reversal, what is going to the balance of the fixed asset? What will be the balance of the fixed asset after this reversal? What is the balance of the fixed asset after this reversal? Over to you. What is the balance of the fixed asset after this reversal? Tell me quickly. Okay, Hardik says 15 lakhs. Now, please remember that for the year 2, depreciation will have to be recomputed. So let's try to understand that. Okay. So now, if you look at the cost of the asset, it was 12 lakhs, from which we had charged depreciation of 2 in first year. Okay. So our closing balance was 10 at the end of first year. And that is when the government grant also got refunded. So therefore it increased by 5 lakhs. So now at the end of first year, what is the closing balance of fixed asset? 15 lakhs. Okay. Now, will the residual value change? No, the residual value remains same. But the remaining useful life is what? The remaining useful life is 3 years. So therefore, 15 less 4 divided by 3. So that is what you will do for computing depreciation. So this is what you will do for computing depreciation, right? Now, this depreciation is something that this entity will have to charge for the remaining period. Yes or no? Yeah. So therefore, at the end of year 2, what is the accounting entry this entity will have to pass? Depreciation amounting to 3.67 lakhs to fixed asset. Okay. And the same depreciation will also be taken to the lender. Right. So in this particular example, we had one additional point. And what was that? Recomputation of depreciation amount. Why? Because this refund will bring the change in the value of the fixed asset. And thereby, after the refund, the amount of depreciation will change. Please remember, approach, methodology for computation of depreciation will not change. That will remain same. Only the amount of depreciation will change. Okay. So that is something you'll have to remember. Clear on this? Clear on this? Yeah. Any questions so far? Over to you. Any questions so far? Clear? All right. So let's look at one more example. All right. So now moving further, let's look at this next example. On 1st April X1, ABC received government grant of 300 lakhs for acquisition of machinery. Okay, sorry, before I move further, I have this question from Tambeshwari. Tambeshwari is asking, why is SLM changed? No, SLM is not changed. We have continued with the SLM. So if you look at this particular computation, Tambeshwari, we didn't change SLM because how can you change the method? Because if the question is telling you SLM is required to be followed, you will have to follow that. You can't change that. Yes or no? Yeah, you can't change that. The only thing we could or we are required to change is what? The balance of the fixed asset. Because earlier it was 10 lakhs, now it is 15. So earlier you were charging depreciation on 12 lakhs. Earlier, you were charging depreciation on 12 lakhs, which got reduced to 10. And if there was no government grant refund, you would have continued depreciation on this 10, then 8, and so on. But now, because the value of the fixed asset has gone up, so this higher amount will have to be depreciated. Yeah. But SLM we didn't change. Okay. Clear on this? Yeah. All right. Kushi is asking why is this amount refunded? Because this is given in the question. So if you look at the question is asking you, okay, to consider this refund. And why would there be a refund? We talked about it, that there must be a non-compliance. In fact, in the question also it's clarified. Even if question is silent on that, you don't need to get into this. So if the question is asking you, there's a refund, you record it, you'll record it. Okay. You are not required to get into the reasoning for the same. If the question will ask you why a refund is required to be given, that is where you are required to give the reasons. Okay. Clear? Okay, so then I can see this query from Nitin. Nitin is asking, sir, 1 and 2 entry की combined entry हो सकती है क्या 12 lakhs की? So what do you mean by combined entry 1 and 2? I couldn't understand. What do you mean by 1 and 2? Are you talking about all of these years combined? Means for first year, second year? If that is the case, no, you should not do that, because each and every accounting is different. Okay. Yeah. In any ways, if you can just elaborate on your query, I'll be able to understand that better. Yeah. All right. Any more questions? I think Kushi has the same problem. How there was a refund. So I think Kushi, you didn't look at the question. Yes or no? So I would request if you can just open your study material, everyone, please. Do you have the study material? Yeah. If you don't have, please download this from BOS website. So please keep referring to the question. Okay. And please understand the question, because till the time we don't understand the question properly, we will not be able to answer this. Okay. Now in this case, the question is telling you grant becomes refundable to the extent of 5 lakh. Okay. So this fact pattern is given. Clear? Kushi, clear on this now? Yeah. All right. So now Malu has a question. Malu is saying, sir, why change in the value of asset after government grant? Because that's the accounting approach. Because previously, when you received the grant, what did you do? You reduced the value of the asset. Now, when the grant is refunded, you will have to increase. You will have to increase. Yeah. So it's logical approach. Earlier, when you are receiving something and you're reducing the value of the fixed asset, and when you are now refunding this, what should you do? You should reverse that accounting entry, and thereby you will increase this. Okay. Sai is asking, sir, if the depreciation method is not given and the salvage value is to be considered for, is the salvage value to be considered for WDV method? See, I would suggest that if the question is silent, okay, which generally not be the case, then it's better to consider SLM because your calculations will be relatively easier. If at all that is not given, then it is up to you. You'll have to write your assumption that this is the method you are considering, and accordingly you'll have to compute. But there again, I would suggest you to consider SLM. Why? Because your computation is relatively easier. So why to get into complication? Okay. Okay. Clear, sign? Clear? Okay. Anyone else? Any more questions on this? Any more questions? No? Sure? Then we'll move on to the next one. Any more questions if you have? Quickly. Neeru says no. Nitin is clear. Malu is also clear. Great. Sai is asking, this is clear, but for WDV method, do we consider the salvage value or not? So can you please help Sai on this? He's asking, so it's a question in general. Okay, so it's a question in general. So if let's suppose WDV method is required to be applied, so will you consider salvage value in that particular method? Tell me. So will you consider salvage value in that particular method? Tell me quickly. Tell me. So will you consider salvage value in that particular method? Tell me quickly. Huh? See, in case of WDV method, what do you do? The WDV that you will have at the end of the year, that is what you consider. Okay, you will not keep reducing the salvage value year on year. That is why you call this as WDV method. Okay, for this I would request you to just maybe revisit some more questions on this computation of depreciation. Huh? So I'm not sure, as to where you can really get it. I would suggest maybe you can just revisit AS10. Fine, to practice this more. Yeah. Okay, so it's all about practicing the. Yeah, so that's how you should look at it. Yeah, but that's how this WDV method really works. Fine. Clear? Sign clear on this? All right, so let's move further. So moving on to the next example. Okay. On 1st April X1, ABC received grant of 300 lakhs for acquisition of machinery. Cost of machinery was 1500 lakhs. Grant was credited to the cost of the asset. Life of the machine is 5 years. Machine is depreciated at the rate 20% on WDV basis. So I think something which you are looking at, sign, okay, is now available for you. Company had to refund the grant in May X4. Why? Because there was a non-compliance. Please understand the question carefully, because all of these fact patterns which are given in the question, that is what we are going to follow. Okay. How would you deal with the refund of the grant in the books of ABC Limited, assuming the company did not charge any depreciation for the year X4? Yeah, clear on this? Now, in this case, if you look at the requirement of the question is not asking you to pass the accounting entries in relation to this complete fact pattern. Yes or no? Even if you look at the refund which has been asked in the question is not asking you about its accounting entry. Question is only asking you for the accounting treatment you'll have to follow. So that's why in this case, what is going to be your solution? Answer as to how this refund will be treated. But the question is also asking you to ignore depreciation for the year in which the refund is given. And after that, you need to comment on this. So that's why it appears that they want you to comment on the accounting treatment along with the numbers. Means you are not just really required to comment on the accounting treatment in a conceptual manner. So it appears question wants this concept to be discussed along with the numbers which are involved. Okay. So that's why, as a first step, what should you do? You should get on to the numbers. Okay. Yeah. You should get on to the numbers. Right. So it appears Hardik has done this computation. Very good. So we'll just look at that computation first, and then we'll come back to the accounting treatment also. Okay. So now it is very clearly given in the question that the net approach is followed. Yes. And please understand, so far all the questions that you have looked at, you would have understood that the question will have a limitation. Examiner will have a limitation. Examiner will have to tell you the accounting approach which has to be considered. Okay. Now to begin with, on 1st April X1, what will happen? When the machine is acquired, grant will be reduced from this. So therefore the machine will appear at 1200 lakhs, on which you are required to charge depreciation, for which depreciation rate is given. So do we need to get into the technicality, how this rate is derived, what is the salvage value, or some of those things? No, no. So you'll charge depreciation on this. So what do you get? Closing balance on 31st March X2. So this is the closing balance on 31st March X2. Now from this, you will charge depreciation again. Now, for the second year, if you compute the depreciation, so please compute this. How do you compute? On 960, you will compute 20%. Yeah, why? Because it's not SLM. So that's why your depreciation year on year will keep changing and will keep reducing also. Okay. Now, at the end of 31st March X3, this is the closing balance that you have. Then once again, you will charge depreciation. At the end of X4, at the end of 31st March X4, what do you have? Closing balance of 614.40. Correct? Now, we are told that there is a refund of government grant sometime in May X4. Now, ideally, what should you do? You should compute depreciation up to that date, get on to the WDV up to the date of refund, but the question has kept it simple for you. Now, please understand why is this done? Only to provide some sort of comfort to you. Okay, so examiner is thinking about you. That's why examiner is saying remove that complication. In this particular year, ignore the depreciation. Okay, and therefore, what is the amount that you will continue with? 614.40. And that is when there is a refund of government grant. So if the government grant is refunded, what do you do? If the government grant is refunded, what do? You will add that to the value of the asset. So therefore, now your revised book value is what? 914.40. Okay. That is your revised book value. Yeah. Now, let's talk about this. Okay. So now, in this case, amount refundable in respect of the grant related to specific fixed asset should be recorded by increasing the book value of the asset. Yeah, that's the accounting treatment. Where the book value is increased, which is the current situation, depreciation on revised book value will be provided prospectively. So therefore, if you look at this particular situation, the revised book value that you will have 914.40, on this amount, on a go forward basis, depreciation will have to be computed. As simple as that. Yes or no? As simple as that. Yeah, clear on this? Yeah. So this is what is you are required to consider. Fine. Okay, so then I think I have a lot of responses. I'm not sure about the questions. I can get on to your questions doubt. I think Larry is asking, sir, if you have to consider 1 month depreciation, then we'll do this sort of computation. Huh? Yes. So on the balance, okay. So if let's suppose say the depreciation was required to be computed, then what will you do? On this book value, you will charge depreciation for the month of April. For the month of April. Why for the month of April? Because in May X4, there's a refund. Yeah. So now in May X4, because the question is not requiring you to compute depreciation, so that's why they have not provided you date. Otherwise, the question will also provide you date, whether it is 1st May, 15th May, 20th May, or 31st May. Okay. Now, let's assume this is 1st May. Then you will charge the depreciation for 1 month. Okay. So that's how you'll have to compute this. Clear? Yeah. Now, Bhavna is asking, sir, now if we charge depreciation on the revised value, from which date we'll have to compute this? From April or from May onwards? See, in this case, once again, I would say there will be a slight complication. What is the complication? The value of the fixed asset has got changed, let's assume on 1st of May. Okay. So therefore, what will you do? For the year when you charge depreciation, for the year when you charge depreciation, for the month of May, sorry, for the month of April X4, let's suppose at the year end, if you are required to compute depreciation, which is again not the requirement, for the month of April, you will charge depreciation on 614 for 1 month and 914.40 for 11 months. So that's how you'll have to do. Okay. Or maybe something else which the question will have to clarify. Okay. Sai is asking, sir, in this case, is the earlier less depreciation recognized to be provided in the P&L after grant? See, Sai, that technicality you are not required to consider. Okay. That technicality you are not required to consider as of now. Yeah. Hardik is asking, sir, doubt like in calculation, we have shortcut of calculation of depreciation. Do we have to show? No. So I think in the exam, please don't get onto all of these shortcuts. Huh? Yeah. See, if this is an MCQ, if let's suppose this is an MCQ, wherein you are required to just choose 1 out of 4, then of course all of these shortcuts etc are good. Why? Because you want to reach to the final answer. Okay, therein it appears to be okay, but when you are required to provide a descriptive solution, all of these steps they carry marks. Okay, so if let's suppose you don't show this table, it's not something that you will always be required to prepare a table. Idea is if you don't show this calculation, then the calculation carries marks. Now let's assume in the exam this question, let's suppose, is for 3 marks. Then what will happen? 2 marks will be there for the working. If let's suppose this is for 4 marks, there again at least 2 marks will be there for the working. Yeah. So please remember, in the question, all of these things you cannot ignore. Okay. Otherwise you will lose out. Okay. Your answer will be correct, but you will lose marks. Okay. So shortcuts in a descriptive question will not work. Okay. Clear on this? Any questions if you have, please let me know. Any questions if you have? Okay, we are not yet done. We'll look at some more questions. Huh? Yeah, everyone clear? Okay, great. Nitin is clear on this. Very good. What about others? Yeah, should we move on to the next one? Okay, Kavita is also clear. Great. Abhishek is clear. Malu is also clear. Great. Okay, so let's move on to the next. Oh, sorry, I can see this query coming from Anirudh. Anirudh is asking, sir, can we write? Okay, so Anirudh has a very important question, and I would say a very, very relevant question, which I'm sure many of you will have. Okay, so if you look at the solution, in the solution, what they have given is they are saying according to para 12 of AS 12, sorry, para 21 of AS 12. Now, Anirudh is asking, in fact, if you look at the solution, it talks about para accounting standard number as well as name of the accounting standard. Okay. And this is something which will have a which will be there in the mind of, I would say, every student. That do we need to write the para number? Do we need to write the accounting standard number? Do we need to write the name of the accounting standard? Now, to this, I would only answer one thing. See, if you present your solution with all of these 3 points, okay, or if you can add the para number, that will always look nice. But let's suppose you don't remember the para number. Now, instead of para 21, let's suppose you have forgotten this para. Instead of para 21, if you write para 20, then your marks will get deducted. Why? Because you have quoted wrong para. So that's why, till the time you are not absolutely sure, refrain from quoting the para number. I'm sure accounting standard number and name you will be able to memorize, and that is not too difficult. If you forget that, there again, forget the accounting standard number also, because wrong quoting of numbers will lead to deduction. Okay, so that's why you should refrain from doing that. But if you can just write that, that will make the solution more presentable. Okay, clear on this? So that's how you should approach this. Fine. And don't get into too much technicality around it. So if you don't write it, so it's all about your conceptual understanding, which approach should be first to get on to demonstrate your conceptual understanding. Yeah. In some of the cases, you will have questions that whether I should use the same technical language which is given in the study material or maybe in the accounting standard. If you can do that, that will always look nice. But there again, you can just present it in any ways in your own language. That is good enough. Okay. Idea should be reached to the correct solution first and then to get into all of those presentations. Okay. Because correct answer is something which matters the most. After that, you will top it up. Understood? Yeah. Okay. Clear on this? Yeah. Any more questions? Ajay, Nitin, you are clear? Great. Anirudh, you are clear? Okay, great. All right. So let's pick up another question. A Limited purchased a machinery for 40 lakhs. Okay. Useful life was 3 years. Residual value was 8 lakhs. Government grant received is 16 lakhs. Okay. Government grant against this machine is 16 lakhs. You are required to show the journal entries to be passed at the time of refund of grant in the third year. Okay, so in the third year, There's a refund. If the grant is credited to the fixed assets, if the grant is credited to deferred grant. So in this particular question, you have been asked the accounting treatment under both the approaches. Okay, so it appears to be a comprehensive one. Yeah, so far, what we have done is there are a lot of questions we have practiced wherein the grant was reduced from the value of the asset. Yes or no? So I'll ignore this part one. Part one I'll ignore. I'll just move on to the part two. Means I'll look at the situation wherein the grant is credited to the deferred income. Okay? Yeah? All right. So now, if the grant is credited to deferred income, here again, you'll have a problem. That's your para number, AS12, all of these are quoted. So don't worry. Okay? Now, in this case, income from deferred income is amortized over the P&L, over the period of the life of the asset. Okay. So now, in the first year, when you receive the grant, what is going to be the balance of the deferred income? Can you tell me? What will be the balance of the deferred income in the first year? Over to you. What is going to be the balance of the deferred income in the first year? Tell me. Tell me quickly. I can see everyone answering 12 lakhs. It appears you're just, cramming this. Can you please look at the question? I'm asking you about the balance of deferred income. Yes, tell me, what is the amount of government grant which has been received? What is the amount of government grant which has been received? Tell me quickly. 16 lakhs. So therefore, what will be the balance of deferred income? 16 lakhs only. Yeah. Larry, I think you are considering the wrong approach. I can see a lot of you considering wrong approach, wherein you are just reducing the value of the fixed asset. I'm saying I'm looking at the approach wherein the grant is credited to deferred income. Okay, please understand the requirement of the question. Don't try to just simply cram it. Okay, so it's not a theoretical question. We'll have to apply the requirement of the accounting standard. Okay, to begin with, in the first year, what will be the balance of deferred income or deferred government grant? 16 lakhs only. 16 lakhs only to begin with. Yes. Now, what is the useful life? What is the useful life? 4 years. So therefore, this 16 lakhs will be amortized over 4 years. This 16 lakhs will be amortized over 4 years. Yeah. So at the end of first year, what is going to be the closing balance? What is going to be the closing balance at the end of first year? 12 lakhs. Very good. At the end of second year, what is going to be the closing balance? 8 lakhs. Correct? Okay. So I can see your responses. Abhishek, Bhavna, very good. Bhaskar, 8 lakhs. Correct. Now, at the end of second year, we understand balance of deferred income is what? 8 lakhs. Now, in this case, do we need to worry about the closing balance of fixed asset, etc.? No, we don't need to worry about it. We don't need to worry about it. Why? Because that is not required to be increased. That is constant. Okay, that is not getting impacted. Why? Because entire impact is there in the deferred income balance. Okay, now in the third year, so we are assuming that to be the beginning of the third year. Now, if the question is silent, what will you do? You will assume that to be the beginning of the third year. Okay, What do? You refund this government grant. So what is the accounting entry will pass? Deferred income debit 8 lakhs to bank 16 lakhs. Why the deferred income will be debited? Because that is the balance. So every time there's a refund, you need to make it zero. And the differential, the balancing figure, where will that impact go? That impact will go to P&L. That impact will go to P&L. Okay. Now, in relation to the fixed asset, what will happen? Nothing. Why? Because the balance of fixed asset in the first year. Can you tell me what was the balance of the fixed asset in the first year? I'm not saying at the end of the first year. I'm saying in the first year to begin with. What was the balance of the fixed asset? 40 lakhs. Anirudh says, great. Now, what is the amount of depreciation you will charge on fixed asset year on year? Tell me, what is the amount of depreciation that you will charge on fixed assets year on year? 8 lakhs. Correct? Because there's a residual value of 8 lakhs. Okay. At the end of year two, what will be the closing balance of fixed asset? At the end of year two, what will be the closing balance of fixed asset? Tell me. At the end of year two, what will be the closing balance of fixed asset? 24 lakhs, correct? Yeah, because you have charged depreciation for 2 years, correct? Now, will this balance get changed? No. Why? Because there's no impact on the fixed asset now. So the fixed assets will continue to be shown at 24 lakhs. And you will continue to charge same amount of depreciation of 8 lakhs year on year. Okay. Unlike the previous approach, wherein the value of the fixed assets used to get changed whenever there was a refund, wherein because the value of the fixed assets used to get changed, the amount of depreciation also used to get impacted. Okay. Yeah. Clear on this? Everyone? Clear on this? Okay. So Larry has a question. Larry is asking, sir, in this case, depreciation method has been assumed to be SLM? Yes. And please remember, every time the question is silent, the general assumption is what? SLM. Why? Because by applying SLM, your calculations are comparatively easier. Yes or no? Because with WDV, you will not be able to consider this residual value or this useful life, all of these things. Isn't it? Yeah? Clear on this? Any questions? Any questions so far? Abhishek is clear on this. Very good. What about others? Everyone clear? Great. Okay, so we'll look at the last one. And after that, we'll move on to our next topic. Okay. So let's look at this last one. Illustration 11. Company X runs a charitable hospital. It incurs salary of doctors. So there's an expense, doctors, staff, etc. to the extent of rupees 30 lakhs per annum. As a support, local government grants a lump sum payment of 90 lakhs to meet these salary expenses for a period of 5 years. Okay. At the start of year 4, company X is unable to meet the conditions attached to the support which the government provides, and therefore will be required to refund this amount of 90 lakhs to the government. at the start of the year. Now, in this question, it's been told to you that it's at the beginning of the year. Okay. Now, in this case, you are required to pass journal entries in the books of the company for the refund of the grant if the grant was shown separately as other income. Now, in this case, once again, can you please quickly tell me what type of grant is this? What type of grant is this? Over to you. Okay, so Kasak says it's a revenue grant. Abhishek says it's a revenue grant. Correct? But if you look at the last sentence, question says if the grant was shown separately as other income. Here again, is the accounting treatment not told to you? Tell me. Tell me all the questions that we have looked at. Did you come across any question wherein the accounting treatment is not conveyed? Tell me, was there any question wherein the accounting treatment is not told to you? Tell me quickly, huh? Could you see any question wherein the accounting treatment is not given? No. So please remember, huh? So you should pray that these questions or these type of questions are asked, because in the question itself, in a way, part of the solution is given. Why? Because this accounting treatment is given to you. The question is there to help you. Yes or no? Okay, so now in this case, we understand it's a revenue grant. We understand the moment there is a revenue grant, how do you need to record this? You will either take it to other income or reduce the expense. But the question is saying you need to take it to other income. Okay, so this accounting treatment is again told. Okay, now in this case, let's get on to the accounting requirement. Okay, now accounting requirement is not for all the years. Why? Because the question is asking you that you are required to pass the journal entries only for the refund. Only for the refund. Now, to begin with, when the government will give you a grant, how will you record it? So can you tell me what will the accounting entry to record this government grant in year one? What will be the accounting entry to record this government grant in year one? Over to you. Very good. Hardik says bank debit to deferred income. Yes. So that means at the end of year one, at the beginning of year one, you will have a grant of 90 lakhs, which you will amortize over what period? Can you tell me, do we have any useful life? So how will you amortize this? How will you amortize this? 5 years. Why 5 years? Can you tell me why 5 years? Because it's a case of revenue grant, wherein you will not amortize over the life of the asset. You will amortize over the period conditions are required to be complied with. Over the period, conditions are required to be complied with. So that's why you will amortize this 90 over a period of 5 years. Correct? So every year, what is going to be the amortization? Every year, what is going to be the amount of this amortization? 18 lakhs. Correct? For 3 years, you will do this. If you do this for 3 years, what is the closing balance you will get at the end of third year? At the end of third year, what's the closing balance? If you do this, 36 lakhs. That is when the refund is required to be given. So when the refund is required to be given, what is the closing balance of deferred income? 36 lakhs. Okay. So when you refund this, you will pass accounting entry for refund 90 lakhs. And what do you debit first? Standard says make the balance of deferred income as nil. So you will take it to deferred income to begin with, and any corresponding impact or the balancing figure, where do you take it? P&L. Means entire impact will not be taken to P&L for this refund. Only the differential impact will go. only the differential impact will go. Okay, clear on this? Clear on this? Everyone? Simple, easy? Yes or no? Yeah? Yeah? Clear on this? Any questions, any doubts if you have, please let me know. We'll now be moving on to our next topic. So if you have any questions, any doubts, please let me know. We plan to move on to the next topic now. Just give me a minute. I'll just open the other document now. All right, any questions? Okay, Manvi is asking, sir, I couldn't compute the remaining deferred income balance. Okay, no worries. So, for you to compute the remaining deferred income balance, what do you need? You need to, first of all, charge the depreciation for 3 years. So, your deferred income balance to begin with was what? 90 lakhs? 90 lakhs? Now, 90 lakhs, if you amortize over 3 years, what is the amount, Manvi? So if you amortize 90 lakhs over 3 years, what is the amount you will get? Tell me quickly. Amortize 90 lakhs over 3 years. What is the amount you will get? Quickly. Quickly. Tell me, I'm waiting for a response. Tell me quickly. Manvi, I'm hoping you're there. Quickly. So if you amortize 90 lakhs over 3 years, what is the balance you will get? 36 lakhs. Okay, Balesh is saying 30. It's not 30, it's 36. Yeah, because 18 if you amortize every year. So after 3 years, what will be the closing balance? 36 lakhs. Okay. So 18 you need to reduce for 3 years. So out of 90, you reduce 54. What is it that you will get? 36. Clear? Balesh Manvi, you are clear on this now? Yes? Clear? Okay, great. So they are clear. Very good. Anyone else? Any more questions? We are just moving on to our next topic. Anyone else? No? All right. So now moving on to the next topic. So now we'll discuss about amalgamation. Okay. We are sort of moving towards the accounting requirements. Where a company can say or amalgamated with another company. Okay. Now, what is the meaning of amalgamation? Or what all things, what all situations will arise in case of amalgamation? For doing this, we have AS 14. Okay, so that's the relevant standard you'll have to look at. Yeah. So now let's try to understand some of the concepts which are involved. Now, for the purposes of amalgamation, let's try to understand few situations. Okay, because accordingly you will be able to consider as to which all transactions you will be calling as amalgamation to which this standard will apply. Okay. Say, for example, there are two companies, A and B, A Limited, B Limited. Now, if let's suppose A is taken over by B Limited, so what does it mean? That A is fully taken over by B Limited. Means after this taking over, after this taking over, A Limited will come to an end. A Limited will come to an end. It will fully get absorbed by B Limited. Yeah. So this is a transaction which will fall within the purview of amalgamation. And what do you call this transaction as? You will call this transaction as absorption. You will call this transaction as absorption. Okay, so that is one. Now, what will be the accounting treatment? All of those aspects will talk about that slightly later. As of now, we are just trying to understand the transactions in terms of the applicability. Okay. Now, Larry, I'll come to all of these points. Huh? So let me just get done with all of these situations. I'm assuming most of your questions will automatically get answered. Okay. Now, another situation. Now, what could be the other situation? Let's suppose there are two companies. Say there are two companies, A Limited and B Limited. Okay, so we have two companies, A Limited and B Limited. Now, both of these companies have been taken over by another company, C Limited. Means after this acquisition, kind of, A and B have come to an end. Their businesses, their assets, their liabilities, all of them will get transferred to which entity? C Limited. So in a way, you can say that A and B have got absorbed into a new company. A new company has been formed to take over A and B. Yeah. So this again is a transaction which will fall under the purview of amalgamation. And what do you call this as? Amalgamation. Yeah. So this is what you call as amalgamation. Okay. Now, let's look at one more situation. So say for example, there's a company A Limited. Now this company has been incurring losses. So it's a loss-making company. Okay. Now a new company has been set up. B Limited. B Limited is a new company which has been set up. And what is going to be the purpose? So B Limited will take over the business of A Limited. Yeah. In this case, again, what is going to happen? A Limited will come to an end. Okay. And this is something which you technically term as external reconstruction. External reconstruction. So this will again get covered within the purview of this standard. Yeah. Now, let's look at one more situation. Say there's a company A Limited and there's a company B Limited. Now in this case, shares of A are acquired by B. or you can say A is acquired by B. Okay, but the acquisition is such, or the plan is such, that after the acquisition, both A and B will continue. So this is what you call as acquisition. This is what you call as acquisition. So in this case, A is not coming to an end. No, it's just simply that its shareholder has got changed. So let's suppose previously A was owned by C Limited, D Limited, E Limited. Now a new shareholder has come, and that is B Limited, which has acquired the shares. And post acquisition, A Limited will continue. A Limited will continue. Means the business of A will continue in A. It will not shift to B. All the assets and liabilities of A will remain with A. They will not move to B. Yeah. This is what you call as acquisition, for which you will not move to this particular standard. Yeah. For which your relevant accounting standard will be different. AS 21 will apply. Okay. That is something we'll cover later on. So as of now, what do you need to remember? That this fourth situation we have discussed is not something which will get covered within the purview of this AS 14. Okay. Clear on this? Now, some of the terms we need to understand. So let's try to understand some of those terms. Now, let's suppose there's a company A Limited and there's a company B Limited. Okay. Say A is acquired by B. Okay. Now, in this case, there are some terms which are going to be repeatedly used. So that's why it's very, very important you understand those terms very, very carefully. The company which is coming to an end, whose business, whose assets and liability are getting transferred. Which company is that? Which company is that? Over to you. Anirudh says A Limited. Very good. Hardik, Bhavna. That's why you will call A Limited as transferor or transferor company. Means the one which is getting transferred is called as transferor company. Okay. And the company in which this A Limited will get transferred, you will call that as transferee or transferee company. Yeah, so these terms are going to be repeatedly used. So that's why it's very, very important you understand that. Okay. Now, this A Limited, which will get transferred, one term for this could be transfer. There's another term which may be used for this. And what is that? This may be called as vendor or vendor company. And the company in which this will get transferred is called as vendee or vendee company. Vendee or vendee company. Okay. Okay. Now, in relation to this transfer, what is going to happen? We understand that A is going to end as far as its legality is concerned, its legal structure is concerned, its existence is concerned. on the date when B Limited will acquire this, will take it over. So what will happen? A will come to an end. Yes or no? Yeah. So that's why at this point of time, what will happen? Few things. Business of A, its assets and liabilities, all of them will get transferred to what? Will get transferred to B. All of these will get transferred to B. Yes or no? Yeah? Clear? Clear? So this was briefly about the applicability, about the transactions that you are going to look at. Okay. Any questions in respect of some of these things that we have discussed? Yeah, we have just started on. There are a lot of things which are going to come. So idea was to just give you a perspective as to what all transactions will get covered, what all transactions will not get covered, what are the terms that we are going to use in respect of defining some of these, because when you will move on to the accounting requirements, all of these things you will have to consider. Okay, so any questions, any doubts you have so far? Okay, so I think this question is coming from Hardik. Hardik is saying, can we call A Limited as amalgamating company? Yes. Yes. Larry is asking, can we not use the terms like amalgamating and amalgamated in the place of transferor and transferee? Yes. See, there is no rule that you'll have to use the term transferor or transferee, vendor or vendee, or amalgamating or amalgamated. In fact, there could also be one more term I have not used over here: acquirer and acquiree. Idea is what? That the question will ask you, or maybe somewhere in the question it will be mentioned that there's one transferor company, there's a transferee company. Okay, or there's one vendor, there is one vendee. Important thing is at that point of time you should understand as to why these terms are being used, number one. Number two, the same terms which are mentioned in the question, you will have to use that. Okay, you will have to use that. Okay. Now, Bhavna is saying, sir, what is the difference between acquisition and amalgamation? Now, this is exactly what I had told you, that in this case, three situations that we have discussed: absorption, amalgamation, external reconstruction. So that is something which will fall within the purview of this AS14. The fourth one, acquisition, wherein A Limited will not come to an end. It will continue its business. Its shares are acquired by B, but it will continue. Okay, this company is not coming to an end. That is what you call as acquisition, for which this standard will not be relevant. Okay, that's the difference. Fine. Pallavi is asking, sir, shareholders having shares of A Limited will get shares of B Limited? Yes. See, there are a lot of points in relation to this taking over of a company. Means how this will be taken over, what all things will have to be considered when this is taken over, what will be the accounting requirement, what all things you will have to do when this is taken over. All of those things we'll discuss one by one. Okay. Yeah, clear? Now, Anirudh is asking, sir, what is the difference between absorption and amalgamation? Very simple. One, both of them will get covered within the purview of this standard. Okay. In case of absorption, there is A which is coming to an end. Why? Because it's taken over by B. But in case of amalgamation, there are A and B which are coming to an end, and a new company is formed to take it over, to take those over C Limited. So that's the difference. Okay. But both of them will cover within the purview of this standard. Okay. Clear? Sai is asking, sir, what is the difference between case 1 and 3? See, no major difference as such. The only thing is that at times, if in case there's a company which is running into losses, and because it's running into losses, so that's why a new company is coming up to take it over. So that is what you call as external reconstruction. Yeah. But if there are some other reasons behind this, that is what you cover under case 1. So that's how these cases have been created. Yeah, but as far as your accounting is concerned, as far as its scoping is concerned in terms of its coverage, it's largely going to be similar. Fine. All right. Any more questions on this? Hardik is asking, like in case of income tax, we have to make sure that at least 75% of the shareholding should be same. So, sir, we will have to follow these conditions here. See, in these three situations, to check whether they will fall within the purview of this standard or not, there is no such percentage criteria. Okay. Though this percentage criteria will come, but that will be for some accounting requirements. I'll talk about it. As of now, in terms of their scoping, there are four scenarios I have discussed with you, or you can say four cases I have discussed with you. The fourth one is not covered. First three are covered. Okay. Clear? Yeah. All right. So I think what we can do is maybe we can take a break now. Yeah. And after the break, we'll continue on this because then we'll move on to some more technicality. Because now we have understood as to what type of transaction will be an amalgamation or which will fall under amalgamation. So we'll now move further on to this. So if that is an amalgamation, how that is required to be looked at for the purposes of our accounting requirements. Okay. All right. So let's take a break. So after the break, we'll continue. Fine. So Manish, let's take a break. All right. So, hi, welcome back. So, we can continue with our discussion. All right. So, now moving further, okay. So, we talked about as to what all transactions will get covered within the purview of amalgamation. Now, in relation to amalgamation, now amalgamation could be of two types. Okay. And when we are saying these could be of two types, we are now looking at it from the perspective of accounting requirements. So, the standard says that the amalgamation could either be in the nature of merger or in the nature of purchase. Now, how is this relevant? Now, please understand when we will get on to the accounting requirements, means when we will start doing the accounting. Now, who are required to do the accounting? So, there are two companies, A Limited, B Limited. When A is taken over by B, so what will happen? We will have to close the books of A. Yes or no? We will have to close the books of A. Yeah, correct. Why do we need to close the books of A? Because A will come to an end. So that's why now, in a way, this company is getting liquidated in a way. Yes or no? So that's why this company's books of accounts will have to be closed, will have to come to an end. Okay. And similarly, for B, because it is taking over A, because it will acquire assets, liabilities of A. So there again, what will happen? There again, we'll have to look at the accounting requirements of B. Now, for these accounting requirements, what is going to happen? We will have to look at the amalgamation depending on the type it may have. Okay, that will again depend on the type of structuring which will be there. Now, what do you mean by structuring? Means whether it will meet the criteria of amalgamation in the nature of merger or in the nature of purchase. Why? Because accordingly, this accounting by A and B will vary. Okay. Now, what are those accounting requirements? What all accounting methods will have to be used? We'll come on to that slightly later. As of now, we don't plan to do that. Okay. As of now, we are just ignoring all of those accounting methods, all of those considerations as to what type of amalgamation it is. We are just simply considering that it's an amalgamation, whether it is in the nature of merger or purchase. And in that amalgamation, one company is going to come to an end and the other company is going to acquire the assets or liabilities. Okay, so that is something which we begin with. Now, in relation to amalgamation in the nature of merger. So let's talk about this now. Okay. Now, in relation to amalgamation in the nature of merger. Now, what is going to be the understanding? Here again, we are not looking at the accounting requirements. We are not looking at the accounting completely. We are just looking at the understanding. We can say there's a genuine pooling of assets and liabilities. There's a genuine pooling of business wherein the shareholders' interests, wherein the businesses of two companies, for example, A and B, they are also amalgamated, or you can say in a way merged. Okay, in a way merged. And that's why it is called as amalgamation in the nature of merger. Now, again, you'll have a question that, sir, how do we assess whether it's a genuine pooling or not? Okay. For doing this, standard gives you some criterias. Standard gives you some conditions. And the standard says if all of these conditions are fulfilled And only if all of these conditions are fulfilled, then what will happen? You will call the amalgamation as the one which is in the nature of merger. Now, what are those conditions? Let's try to understand those conditions one by one. Liabilities of the transferor company. Now, in our example, let me just put it down. A limited is there and B limited is there. So A is taken over by B. A is taken over by B. Okay, now all the assets and liabilities of transfer company. So can you tell me what will be the transfer company? What will be the transfer company? A limited. Very good. A limited. Pallavi says A limited. Okay. Pranav says A limited. Very good. So all the assets and liabilities of A limited become, after amalgamation, assets and liabilities of B limited. All means all assets, all liabilities. So this is condition number one. Okay. Please remember, all the conditions are required to be fulfilled. Okay. It's not one of these conditions, all. What is condition number two? Shareholders holding not less than 90% face value equity of the equity shares of transfer company become equity shareholders of transferee. Means at least 90% of the shareholders of A, at least 90% of the shareholders of A should also become shareholders of B. Now please understand, when B will acquire A, so what will happen? There will be various shareholders of A. There will be various shareholders of A. So what is a company? Company is nothing but, you can say, is a pool of assets, liabilities, or a business which is run by some shareholders or which is owned by some shareholders. So if you will take over A, so what will happen? B will not make any payment to A. B will make the payment to owners of A. Yes or no? So B will make the payment to owners of A. Correct? So now, when B will acquire A, so what will happen? B will reach out to the shareholders of A and will ask those shareholders, do you want to continue? If they say yes, then what will happen? They will now become the shareholders of B. Why? Because this business of A has shifted to B, so therefore they will now become shareholders of B. So the point is that if, let's suppose, earlier there were 100 shares, so at least 90 shareholders continue to remain the shareholders, or they become the shareholders of B limited. At least, if that is more than 90, that is good enough, but at least it should be 90. Okay. Priya is asking, should that be the same percentage of ownership in B limited? Not necessarily. Yeah. So their percentage of ownership in B can always be lower. Yeah. But at least those shareholders have to be there. No, Hardik is asking, can we say that 90% shareholding should be same? No, that is not the point. That is not the point. We are just saying that the same shareholders are required to continue. Now, whether they, after this amalgamation, only hold 5% of B, only hold 50% of B, that doesn't matter. That doesn't matter. Okay, that is not the criteria. That is not the criteria. Okay. Now, Pallavi is asking, so rest 10% holding by another small shareholders. See, rest 10% holding could be by anyone. whether those could be, whether those are various shareholders or that is only one shareholders, it doesn't matter to us. Okay, whether shareholding is of small shareholders or large shareholders, no, that doesn't matter. Important point is what? That at least 90 of them continue further. How do they continue further? By becoming shareholders of B Limited. Okay, so that's the point we need to remember. That's the understanding we need to carry. Clear on this? Everyone clear? Anyways, we are going to practice some questions, huh? Okay, wherein all of these points will be touched upon. Yeah, anyways, that is going to come. All right. Waiting for your questions, doubts if you have. Okay. So it appears you're clear. Great. Now, third condition. Consideration for amalgamation receivable by those equity shareholders of the transferor company who agree to become equity shareholders of transferee company discharged by the transferee company wholly by the issue of equity shares in the transferee company, except that cash may be paid in respect of fractional shares. Now, in the third condition, what does it say? It says when B Limited will make the payment. Okay, so let's suppose there are shareholders. Okay, now the shareholders of A, we are talking about shareholders of A who will be paid by B. Who will be paid by B means all these shareholders who will be paid by B, out of these, those shareholders who agree to become equity shareholders of B. So let's assume that is 90%. Let's assume that is 90%. Standard says that to this 90%, what will happen? B will have to make some payment. B will have to make some payment. Yeah. So there are three ways payment can be made. In fact, there are four ways payment can be made. Either B can issue its own equity shares to these 90% shareholders, or B can issue its preference shares to these 90% shareholders, or B can pay them cash, or B can give them some other assets. So what is the requirement of the standard? That to this 90%, what is required by B? That B will have to pay them by issue of equity shares only. Means B will have to give its shares of B to these 90% shareholders. But at times it may happen that a fractional share is required to be issued for completing the payment. So will that fractional share be paid? No. So for that fractional share, cash may be paid. Means bank payment could be done. Otherwise, it has to be purely through issue of equity shares by B. Okay. So in a way, we are continuing with the conditions. So one, we are saying all assets and liabilities should transfer. Then we are saying 90% shareholders should become shareholders. Then we are saying those 90% shareholders should also be getting the consideration in the form of equity shares only. Okay. Okay. Clear? Sai is asking, sir, please explain other than clause. So what do you mean by other than clause? Okay. So it says shareholders holding not less than 90% face value of equity shares other than equity shares already held therein immediately before amalgamation. So it may happen that let's suppose there are 100 shareholders in A. Okay. Out of these 100 shareholders, what is the requirement? at least 90 should become shareholders of B. Okay. Now let's suppose out of these 100, before amalgamation, there were two shareholders. There were two shareholders. Okay. These two shareholders were also the shareholder of B. Along with A, they were also the shareholders of B before amalgamation, we are saying. Okay. In such a case, standard says that you should consider this 90% shareholding. Yeah. By excluding those, means by excluding those. So other than the equity shares which are already held therein immediately before amalgamation. Okay. So for example, if those two are excluded, so what will happen? You will require 92. As simple as that. Yeah. Next, condition number 4. Business of the transfer company is intended to be carried on after amalgamation by the transferee company. So it should not happen that B will just continue the business of A. See, in most of the cases, whenever this merger is done, in most of the cases, what will you find? That A and B will be into similar line of business. Generally, why is this merger carried out? To get synergies of business. To get synergies of business. At times, it may happen that B, let's suppose, manufactures something. B is into manufacturing of something. Let's suppose B is manufacturing product A. So what is the business of A? To manufacture product A. And for this manufacturing of product A, let's suppose B requires some raw material which is manufactured by A. B requires some raw material which is manufactured by. So what may happen? B may take over A. So that this raw material going forward, B will not have to purchase. B will be able to manufacture it on its own. Yeah. So by continuing with the same business. Or it may happen that currently, let's suppose A and B are competitor. A and B are competitor. Now to kill this competition, what B can do is B can take over A and discontinue business of A. So what will happen? Only B will remain. So the point is that business of A, if it's taken over by B, should continue. Okay. Only then it will be considered to be amalgamation in the nature of merger. Okay. Fifth condition. No adjustment is intended to be made to the book values of assets and liabilities of the transferor company when they are incorporated in the financial statements of transferee company, except to ensure uniformity of accounting policies. Now, this is again very important. When A will be taken over by B, so along with business, there will be various assets, various liabilities of A which will move to B. Yes or no? There will be various assets, various liabilities of A which will move to B. Correct? Now, standard says that those assets and liabilities, they must be appearing in the books of A at some value. They must be appearing in the books of A at some value. Yes or no? Yes or no? What do you call those values as? Book value. What do you call those values as? Book value. Yeah. So they should get transferred to B at the same book values. Let's say, for example, there's a machine of A, which let's suppose was appearing in the books of A at 10 lakhs. Now this machine should transfer to B at 10 lakhs. It should not happen a revaluation is carried out. Maybe at the time of amalgamation, a revaluation of machine is done, because of which it has gone down to 8 or has become 12 lakhs. And then it is taken over by B. No. It should move to B at book value only, at book value only. But at times, what may happen is accounting policy of A and B could be different. Accounting policy of A and B could be different. So let's try to understand this point. So what does it mean? Or how is this going to impact that the accounting policy of two could be different? Okay, let's suppose A Limited has got inventory, which let's suppose is appearing at 100. A follows FIFO method for valuation. Okay. Now, if you look at B for inventory, B follows weighted average. Okay. Now, when inventory of A will be taken over by B, so what will happen? Let's suppose B has got inventory of X. So this will become X plus 100. Yes or no? So this will become X plus 100. So if you take it over at B, sorry, book value, what does it mean? Inventory of B will become X plus 100. Yes or no? Tell me quickly. Inventory of B will become X plus 100. Yeah. But going forward, B in a way is merging this complete A. All the assets and liabilities of A are merged in B. Yeah. And because B follows valuation of inventory at weighted average. Therein, if you bring in an inventory which is valued at 100 using FIFO, so what will happen? This will lead to an inconsistency or not? Why? Because after this, what will happen? After this, what will happen? B will start recording this X plus 100 at weighted average on a go forward basis. On a go forward basis, in which case this 100 was previously valued at FIFO. So do you think this will be appropriate? Do you think this will be appropriate? Pallavi says no. So that's why what should be done? That's why even though book values will be carried forward, this 100 should be adjusted to bring it in line with this accounting requirement. Why? Because going forward, this has to get measured at this accounting only. Yeah. So the standard says that you will bring all the assets and liabilities at book value. But if there is any change in the accounting policy of two companies, then you may have to do a plus or you may have to do some minus. Why? In respect of those accounting policy changes. So now this 100, if let's suppose weighted average would have been used, so this may have become 110 or 90, and then this number should move. Understood? Understood? Everyone clear on this? Yeah? Yeah? Clear on this, everyone? All right, so now coming back to these. Now please remember that every time an amalgamation has to be considered as the one which is in the nature of merger. All these five conditions you'll have to look at. I'm saying all these five. Okay. It will not be one of these. It will be all these five. Okay. It will be all these five. Okay, Larry has a question. Sir, are there any specific conditions for a company to get amalgamated with other, like only if loss incurred? No, no, there are no such conditions. Okay, there's no such condition. Very simply, there are four case scenarios which I told you before the break. Out of those four case scenarios, three you can say are the one which you will consider as amalgamation. Whether you call it as absorption, external reconstruction, that is amalgamation for us. Let's keep it very, very simple. Let's not bring in any unnecessary complication. So wherever anything will be required, I'll let you know. Otherwise, you'll have to keep it very, very simple. Okay. The complication will arise further when you will say that yes, this transaction qualifies for amalgamation. That is where you'll have to break it into two parts, whether it is the one in the nature of merger or the one in the nature of purchase. Okay. Yeah. Okay. Tambeshri, it doesn't matter. So let's not get on to the numbers. Please get on to the concept. Okay. As of now, we are discussing the concept. Fine. Harding is asking, sir, if one condition is not fulfilled, see, if one of these conditions is not fulfilled, then it will not be an amalgamation in the nature of merger. As of now, let's talk about it. Okay. Whether it will be in the nature of purchase or not, we don't know. As of now, we are just discussing whether it is in the nature of merger, yes or no. So for yes, all the conditions are required. For no, either of these conditions, if that is breached, it will become no. Okay. Clear? Clear? Any questions so far? Quickly, any questions? Any questions? Any doubts? No? Clear? Great. All right. So now along with this, we will try to understand the other type of amalgamation. What is the other type? One which is in the nature of purchase. Now, this is very, very simple to understand. Why? Because the standard has not defined what is amalgamation in the nature of purchase. What do you mean by not defined? Standard simply says that if the amalgamation is not in the nature of purchase, what does it mean? That if any of those five conditions are not fulfilled, then it will not be an amalgamation in the nature of purchase. Then what type of amalgamation will it become? Amalgamation in the nature of purchase. Okay. Yeah. So the point is very simple. Fulfill all those five conditions, call it as one in the nature of merger. Otherwise, it will become in the nature of purchase. As simple as that. Clear? Clear? Yeah? All right. So now, depending on the type that we have, what will happen? Their accounting will also vary. Depending on the type that we have, their accounting will also vary. Okay. Now, as of now, we are not getting onto those accounting requirements. That what will be the accounting requirement under the one which is in the nature of merger or nature of purchase. Now, there's one more concept that we need to understand. That is called as consideration, or you can say purchase consideration. Now, what do you mean by purchase consideration? So let's try to understand about this. We discussed that A Limited will be taken over by B Limited. Correct? And for doing this, what will happen? Now, irrespective of the fact, please remember, please understand this. Irrespective of the fact whether it is an amalgamation in the nature of merger or an amalgamation in the nature of purchase, irrespective of that, B Limited will be required to make some payment of these shareholders. Yes or no? Shareholders of A Limited. So B will have to make some payment to these shareholders. Yes or no? Tell me. Yes or no? Is that required or not? Yes. Pranav says yes. Very good. Now, this payment which B Limited will be required to make to the shareholders of A Limited, what do you call this payment as? Consideration. This is what you call as consideration. Okay. And for which we discussed that this consideration could be in the form of shares, any other securities which B may issue. This payment could be in the form of cash or any other transfer or any other asset which may be transferred from B to those shareholders. Yes or no? Yeah. So it could be any of these, or it could be all of these, or it could be some of these. Means A may also give shares plus cash. A may give equity shares, B may give some shares and cash. B may give some equity shares as well as preference shares. B may give equity shares plus cash. B may give equity shares plus some other assets. So we don't know as to what is going to be that combination. The point is anything which flows from B to these shareholders, that is what you call as consideration. That is what you call as consideration. Okay. Now, in relation to this consideration, there are some methodologies which are required to be considered. There are some methodologies which are required to be considered. Okay, so what we'll do is we will get on to computation of that consideration. We'll try to understand as to how that consideration is required to be looked at. All right, so let's simple one. We'll try to compute the consideration in this example. Okay, so if you want to refer the study material, you can just open this. Okay, so this is for your references, page number 9.32. 9.32. Okay. So now there are various ways through which this purchase consideration can be computed. So we'll look at some of those ways. Yeah. And we'll also talk about all of those methods. Fine. A Limited take over B Limited. A Limited take over B Limited on 1st of April 2000 X1 and discharges the consideration for business as follows. So what are the ways through which consideration is paid by B Limited? B Limited issued 42,000 fully paid equity shares of rupees 10 each at par to the equity shareholders of B Limited. Yeah. Sorry, A Limited has taken over B Limited. My mistake. So A Limited, what will it do? A Limited has issued fully paid equity shares, 42,000 to equity shareholders of B Limited. A Limited has issued fully paid 15% preference shares of rupees 100 each to discharge preference shareholders of B Limited at a premium of 10%. Okay. It is agreed that the debentures of B Limited, which is rupees 50,000, will be converted into equal number and amount of 13% of 13% debentures of A Limited will be given. Okay. You are required to determine amount of purchase consideration as per AS 40. Some of you may have computed this, some of you may not have computed. Okay, so I'll not want any answer from you. We will try to compute this once, and then we'll also look at the concept once. Okay, as of now, what I'm trying to do is I'm just trying to discuss the concept with the help of this example. Now, please remember, any payment is made to the shareholders of the transferor company. Please remember, only the payment which is made to the shareholders of the transferor company, that is what you will call as consideration. Now, what do you mean by payment made to the shareholders? See, shareholders could be of two types. One, who hold equity shares. Second, who hold preference shares. So both equity shareholders and preference shareholders will be considered as shareholders of the company. If the transferee company makes the payment to any party, to anyone, which is other than the shareholder, can we call that as purchase consideration? Answer is no. Answer is no. That will not be considered to be a purchase consideration. Okay. So what does it mean? In this case, who is the transferee company? Can you tell me? Who is the transferee company? Who is the transferee company? A Limited. Very good. Now, A Limited, if you look at, has been paying three things. One, equity shares to equity shareholders of B. Preference shares to preference shareholders of B. Debentures to debenture holders of B. Now, can we say that the debenture holders of B Limited are the equity shareholders, are the shareholders of B Limited? Can we say that the debenture holders of B are the shareholders of B? Answer is no. So that's why when the question requires you to compute purchase consideration only, I'm not talking about the accounting requirement. As of now, we have not discussed accounting. So if the question requires you to compute the purchase consideration, so will this consideration which A provides to the debenture holders of B, will that be of any relevance? Will that be of any relevance? Tell me. Pranav says no. Yeah. So what will you do? You will have to ignore that. You will have to ignore that. So that means that in this particular example, only two things are required to be considered by us. What are those two things? Payment to equity shareholders and payment to preference shareholders. Understood? Yeah. All right. So now, payment to equity shareholders is done through equity shares of A. So A has issued 42,000 shares of rupees 10 each. So what is the payment? 42,000 into 10, 4,20,000. So that is the first payment. Okay. Second, it says 15% preference shares of rupees 100 each have been issued to the preference shareholders of B Limited. What is the amount? Preference shareholders of B Limited were 1,70,000 and the preference shares of A have been issued at a premium. So what does it mean? That 1,70,000 is paid through preference shares at par value, and 10% on that is again paid through preference shares in the form of premium on preference shares. Okay. So all in all, what is the total amount which has been paid? 6,07,000. Now we are not saying that this payment is made in cash or preference shares. We are just simply saying that this is the payment which is required to be made to the shareholders of B Limited. And that's why, what will you call this as? This is something which you will call as a purchase consideration. Okay. This is what you will call as purchase consideration. Everyone clear on this? Any questions on this? Everyone clear? Everyone clear on this? What's the meaning of purchase consideration? How do you compute purchase consideration? Everyone clear? Yeah. Okay, so Pallavi is asking, sir, in the question it is written in second point rupees 100 each. Yes, that's correct. So they are saying in second point that preference shares which will be issued, so each preference share will be of rupees 100. Okay. Currently, we have not computed the number of preference shares. So that's why we are not required to get onto that. We just simply understand that for B, what is the amount which those preference shareholders will require? 1,70,000. For A to settle preference shareholders of B, what is the amount which is required? 1,70,000. So that will be paid. Over and above that, 10% premium will also be paid. Over and above, premium of 10% will also be paid. Now, how is this rupees 100 each required? Where is this relevant? Where the number of shares are required to be computed. Okay, I think Nancy has also solved this. Clear? Everyone clear on this? Any questions, any doubts if you have? Tell me quickly. Tambeshwari is saying, sir, debentures are not considered. Yes, debentures are not considered. Why? Because the debenture holders of B are not the shareholders of B. Okay. And whenever you will have this situation, you should also write a note in the exam. What is the note? That debenture holders are not the shareholders. Payment made to them will not be considered as purchase consideration. Will that payment be considered for accounting purposes? Yes. But we'll talk about it when we'll get on to the accounting requirements. As of now, we are not looking at the accounting requirements. As of now, we are only looking at the purchase consideration. Okay? Yeah. So I think Kavita has a question. Yes, Kavita. You have not written your question. Huh? So please let me know what is the question. What is the question, Kavita? All right. Any questions, any doubts that you have, please let me know. Tambeshwari is asking, sir, equity converted into preference shares when this is purchase consideration. See, as of now, you should not think whether the equity will be converted into preference shares will be converted into equity, whether the consideration will be in cash or something like this. As of now, what was the objective? Objective was to compute purchase consideration. And for doing that, what did we discuss? We discussed one simple thing, that any payment which is made to the shareholders of transferor company, that is something which will be called as purchase consideration. Clear, Priya? Yeah. Mallu is asking, sir, 15% preference shares का amount नहीं दिया तो कैसे calculate करने का? See, there are a lot of questions you can create, a lot of situations you can create. Okay, but in the given question, with the relevant information that you have, if the amount is not given, there's no way you will be able to calculate. Okay, so every time you look at the question, you will have to understand the requirement accordingly. So in the given question, if the amount of the preference shareholders will not be given to you, so you will not be able to compute. Okay, so that's a hypothetical thing you are asking. Understood? All right. So I think what we can do is maybe, instead of moving further, I can just discuss your questions, your doubts. Okay. So as of now, what we can do is we can just move on to your questions, doubts. So I'm not planning to cover anything further. So what I'll do is I'll just talk about your questions and the doubts. Fine. All right. So I can see one query coming from Priya. It appears she's slightly confused on this. No worries. Okay. So Priya has a question. She is asking, sir, what is exactly purchase consideration? Very good. So let's understand, Priya. Okay, I'll try to explain this to you in a very, very simple manner. Let's suppose there's a company A Limited. Okay, now Priya, you need to answer a few questions. Huh? So, do you understand a company is owned by the owners? Priya, do you understand a company is owned by the owners? Yes. What do you call the owners of the company as? Tell me. What do you call the owners of the company as? Shareholders. Very good. So say there is a company B Limited. Now its owners, you will also call them as shareholders. Yes or no? Yeah. So the owners of B are what? Shareholders. Okay. Now let's suppose, for B, let's suppose for B, there's one owner, Priya. Okay, let's suppose there's an owner, Priya. Now Priya owns this company B Limited. Okay. Now let's suppose there's a party. Now who's the party? A Limited. So this company wants to acquire B Limited. Let's suppose this company wants to acquire B Limited. So what is it that A Limited will have to do? A Limited will have to own this company. A Limited will be required to buy this company or purchase this company. Yes or no? Yes or no? So if A Limited wants to buy, then what will happen? A Limited will have to reach out to Priya. Why? Because Priya is the owner. So if you want to buy something, what is it that you'll do? You will reach out to the owner and you will say, I want to buy this company. Yeah. So if let's suppose A Limited wants to buy something from Priya, how will that be possible? So Priya will say, okay, fine, I'm happy to sell this, but I'll need payment against this. I'll need payment against this, yes or no? So that is something which Priya will ask, yes or no? Now, this payment which A will give to Priya could be in various forms. Maybe A will give some cash. Maybe A will give some assets other than cash. Or maybe A will say that Priya, you keep shares of A Limited. You keep equity shares of A Limited. You keep preference shares of A Limited. Okay. Now this payment could be in various forms. Yes or no? This payment could be in various forms. So there are various ways. This payment is what you call as consideration. Okay. This is what you call as consideration. Clear? Priya, clear on this now? Priya, clear on this? Okay, Bhavna is asking, sir, if A Limited give shares to Priya, so they can give shares to Priya, they can give cash to Priya, they can give some anything else, maybe jewelry, any metal, anything they can give. Huh? So we don't know. Whatever they want to give. Yeah. Something which is given by A to shareholders. That is what you call as consideration. Okay. Clear? Yeah. Consideration or purchase consideration. That's one and the same thing. Huh? That's one and the same thing. Fine. Clear? Yeah. Anyone else? Okay. Now, Niveta is asking, sir, why the debentures are not covered? I think you can only answer this question. Let's suppose in case of B Limited, there are some debentures. Let's suppose in case of B Limited, there are some debentures. Means the B Limited has also issued some debentures. So can you say that these debenture holders are the owners of B Limited? Niveta, can you please tell me? Can you say that these debenture holders are the owners of B Limited? Niveta, over to you quickly. Can you say that the debenture holders are the owners? I'm waiting for a response. Niveta, you're there? No. So the moment you say no, what does it mean? What does it mean? That this payment is not made to the owners. And please understand, repeatedly I have clarified. Any payment which is made to the owners, any payment which is made to the owners or the shareholders, only that payment is what you call as purchase consideration. As simple as that. Clear? Clear on this? Yeah? Then I think Tambeshwari is asking, sir, in case fresh equity shares are issued. So I think you can just keep asking same question over and over again. Okay. My answer will not change. Huh? So whether the equity shares are issued, whether the equity shares are fresh, old, whether preference shares are issued, cash is given, all of them, that is nothing but the purchase consideration. Okay. Bhavna is asking, sir, preference shareholders are also not the owner. No. For the purposes of this accounting, preference shareholders are also considered. Okay. Preference shareholders are also considered because they are the shareholders. Because I told you, owners oblique shareholders. Understood? Yeah. Bhavna, clear on this? Priya is asking, sir, bonds. See, that's what I'm telling you. Huh? You can just keep creating a laundry list. Okay. I would advise you to answer all of those. If you just keep asking me bonds, then you may say that loan from a bank. You tell me what should be the answer. Very simply, you need to understand the concept that the shareholders are the one which will be considered. Other than the shareholders, not considered for the calculation of purchase consideration. Clear? Bhavna clear? Priya clear? Quickly. Neeru is asking, sir, if the equity shares are not fully paid up, how do we calculate? So that part we'll cover later on separately. Fine. Hardik is asking, sir, but if cash and assets will be given, then it will be in the nature of purchase. See, that's what I told you. That as of now, we are not discussing whether it's in the nature of merger or purchase. Did I tell you that it's in the nature of merger or in the nature of purchase? We have ignored that part. We are just simply looking at the meaning, understanding of purchase consideration. Okay. So that part will pick up later on. As of now, don't increase the complexity. Anyways, there's a lot of complexity. Yeah? So let's go step by step in a very, very simple manner. Okay. So we'll just try to unfold each and every point as and when that will arise. Fine. Okay. All right, great. So I think with this, we can just conclude our discussion for today. Yeah, so some of you who just want to move out, they can just feel free. Thanks everyone for your time and for the wonderful participation you have shown again. Yeah. Any questions, any doubts? No? All right. So then I think we can just conclude our discussion for today. But my request are very, very important that please make sure that you revise everything we have covered today before we meet next. Because in the next session, we are going to continue on this. Okay. We'll also be moving on to the accounting requirements in the next session. And if you don't revise all of these things, then what will happen? You'll have a lot of questions. Huh? There will be confusion. So that's why it's very important that before we meet next, each and everything that we have covered in relation to AS14 today, you revise. Fine? Yeah? All right. Great. Thanks once again, everyone. Manish, we can just close this discussion now. All right. Thanks.